Good morning. Thank you for joining today's daily webinar. Today, we're going to discuss your solo 401k options. That way, you know your options. Go ahead and also shoot over any questions you might have during these daily webinars. We go over your live questions on the air and we cover certain topics. Today's topic is solo 401k options. Know your options. As always, today's presentation is for educational purposes. With respect to knowing your options, your solo 401k options, that is, it can be confusing, especially if A, you've never heard of a solo 401k plan and are exploring it for the first time, and B, you're not aware of the different types of institutions that offer solo 401k plans. Today, we're going to try to help you understand your different solo 401k options to help you make an informed decision. As always, please like our video, subscribe to our YouTube channel, like it with others, as they will share it with others, I should say, to help get the word out to other solopreneurs like yourself. So, with respect to knowing your options regarding solo 401k, specifically if you're looking to open a solo 401k plan for the first time, there are various types of solo 401k providers in the industry. Some offer regular solo 401k plans, that is, they are watered down in that they cannot be self-directed into alternative investments like real estate, precious metals, and so forth. And they also do not allow for the mega backdoor Roth solo 401k strategy, and they may not allow for solo 401k loans. That's typically the case. Those type of vanilla solo 401k plans are usually offered by insurance companies, as well as brokerage firms and banks. Some brokerage firms that offer what we like to refer to as regular solo 401k plans without the bells and whistles are Fidelity, E-Trade, Schwab, for example. From a bank perspective, it's typically Wells Fargo Bank, Chase Bank, Bank of America. From an insurance company perspective, it could be Mass Mutual, Alliance Life, Pacific Life, Voya, Sun America. Those are some examples of insurance companies that offer watered down solo 401k plans that oftentimes just allow for investing in annuities. That's how insurance companies typically will offer not only IRAs, but also solo 401ks is for the purpose of investing in annuities, whether a variable annuity or a fixed annuity. Now back to your different solo 401k options to continue that. We just talked about the vanilla ones. And then you've got some that are self-directed and some that are self-directed with checkbook control. Some of the ones that are self-directed may allow for investing in alternative investments and loans, but they may not allow for the mega backdoor Roth solo 401k strategy. And what is more, you're stuck with that particular self-directed custodian holding your funds as well as holding your investments. So not everybody likes to go that route. Most clients we find like to go the self-directed checkbook control method, which is another way to describe a fully self-directed solo 401k plan with all their bells and whistles. For example, fully self-directed with checkbook control or wire control simply means that, one, you can take a loan from the solo 401k plan. You can also invest in alternative investments like real estate, promissory notes, precious metals, etc. You can also perform the mega backdoor Roth solo 401k strategy, which entails making a voluntary after-tax solo 401k contribution and then immediately converting that contribution to the Roth solo 401k or the Roth IRA. It also comes with the auto contribution credit, which is $1,500. For instance, anyone that opens a solo 401k plan in 2025 with a fully self-directed solo 401k provider, such as my solo 401k financial, will have a plan that comes with that auto contribution credit where you're going to be able to get a $500 dollar for dollar deduction on your business tax return over 3 years. And that's broken down in $500 increments for a total of $1,500 over 3 years. So that's another great feature of a Checkbook solo 401k plan. Also, with the solo 401k that's self-directed with Checkbook control, you get to choose where to hold the money at. Unlike a self-directed 401k where the custodian holds the funds, with a self-directed solo 401k with Checkbook control, you get to choose the depository taking institution to hold the money, which can be very important, especially if you don't know who that custodian is. You may not trust their banking process. Maybe their banking their banking side. Maybe they're out there doing loans that are not very well backed. So what happens in the event that they run into liquidity issues? Are your funds going to be safe? Well, with the self-directed solo 401k, you can ease those concerns by choosing where to hold the money at. You get to choose the bank and or credit union or the brokerage firm to hold the money at. For example, here at my solo 401k financial, we've been assisting clients since 2009 and opening up Checkbook self-directed solo 401k plans with all the bells and whistles that I discussed earlier. And they have been able to choose where to hold the money at. And they can do that because the IRS code allows you to choose where to hold the money at, and you can be the trustee of your own plan. And when you work with a company like my solo 401k financial, we will actually handle reporting for your plan, not only the mandatory IRS plan updates and amendments, but also any type of reporting, whether it's distribution reporting, conversion reporting, or informational reporting, such as Form 5500 Easy. And we provide that service at no additional fee, provided that you timely request that service, as we don't have access to your funds. So those are items to understand when you're exploring your solo 401k options. These are some great slides here that go over that in more detail, the various type of providers out there, and so forth. So take a look at that. Again, thank you for joining today's daily webinar. Please share it with others to help other solopreneurs understand how it all works. And it looks like we've got a live question here. Go ahead and shoot over your questions as well. That's the purpose of these daily webinars. What is the proper way to sell vacant lot owned by the self-directed Roth 401k? Can it be a private transaction without listing? Is the real estate agent necessary? How thorough should the process be? Great question. And no, you're not required to use a real estate agent in order to sell a property owned by the solo 401k plan, such as a vacant lot. You get to choose how to go about performing that sale. You just need to make sure that it's done at a fair market value, because the purpose of investing in a solo 401k in any type of asset, whether real estate or private investments or equities, is to grow the retirement plan. So as long as you perform that at fair market value, that sale at fair market value, then no, you don't have to actually go through a real estate agent. All right, great question. If you have any other questions, go ahead and shoot them over. We'll be live again here today at 1 p.m. Pacific time. We went over your solo 401k options, what to know. As always, thanks for joining today's daily webinar and have a great rest of the day.